All right, it's D-Day for foreign tax evaders. Today is the IRS deadline for taxpayers to come clean about their secret offshore accounts. The agency plans on intensifying its hunt for evaders. Our next guest says over the last few days, his office has been swamped with client calls. Let's bring in Offshore Rubinstein, partner of Rubinstein Rubinstein, who covers asset management. And we've had you on the show before talking about this. It's interesting we finally get to October 15th because we started talking about this months before the deadline when it was still September 23rd. And you're still getting a flood of clients who want to come clean because it makes so much sense financially.
That's right. Even this afternoon, we were getting emails and phone calls from people who are just waking up to the fact that they have some serious reporting obligations and tax-paying obligations to do by the end of today.
How come? Wait, help me out here. They're just waking up today?
Yeah, believe it or not, even though it's been so in the news over the last 6 months, the voluntary disclosure program is not new. The UBS settlement is not new.
Right.
The tax haven, the offenses against tax havens by the Obama administration, by prominent senators and by foreign governments as well. The fact that many tax havens have been made to sign tax information exchange agreements, none of this is new, and yet some people really waited until the last minute to try to become compliant.
Let's just set up for viewers at home who maybe are thinking about calling your office later today. What happens if you turn yourself in now? The IRS charges you.
If you turn yourself in now under the voluntary disclosure program, you'd have to pay, number one, the back taxes for the last 6 years on the foreign account. Number two, interest on those back taxes. Number three, what the IRS calls an accuracy penalty equal to 20% of the tax. And number four, a voluntary disclosure penalty equal to 20% of the highest account balance over the last 6 years.
Now, and the graphic we have up now is what you would avoid if you actually turned yourself in now, right? Because you don't have to go to jail if you turn yourself in by the end of today. Do they seize your accounts?
They
don't
might
face fraud charges?
See, what happens is if you don't go into the program and you don't voluntarily disclose, but instead the IRS fines you, then the 20% penalty is off the table. Now you're looking at 50% of the value of the account for every year that the account has been in existence. And you're not limited to just 6 years, which means that after a couple of years, the account could be depleted, right, and you're still on the hook potentially for huge amounts of fines. So you're looking at bankruptcy and jail time.
All right, so you say a bunch of clients are coming in, they're calling you, they're talking to you. I mean, does everybody say, hey, no brainer here, I'm going to come clean?
For most clients, let's say for 8 or 9 out of every 10 that I meet with, it is a no-brainer. They want to come clean. They want to make amends for past non-compliance and make sure that they're compliant going forward, and they want to sleep at night. But for every 10, we have 1 or 2 clients that say, look, I just have so much money in that foreign account, I'm just not prepared to part with a big chunk of that, even if it means that I'm going to have to hope that the IRS doesn't fine the account. Still, you know, I counsel the client. This is what happens if you're in. This is what happens if you're not in.
I mean, are they crazy? Do you think ultimately the IRS will find everyone?
I think ultimately the deck is stacked against people that are relying on offshore banking secrecy. There's still many ways, there's still many good reasons to be offshore. It's not illegal to be offshore, but you need to be compliant if you have a foreign bank account. You should be offshore for tax, for asset protection reasons, for example, to have access to foreign investments, for example. But you really want to be compliant. If you're not compliant, what happened over the last year with tax information exchange agreements, with UBS being made to settle, with the anti-tax haven legislation proposed by Senator Levin and President Obama, really the deck is stacked against people that are relying on banking secrecy.
Yeah, I mean, where do you keep your money these days? You know, as you've mentioned before, one by one, the big famous ones have sort of fallen off the chart. You can't go to Luxembourg, Liechtenstein. You can't go to Switzerland. You can't go to the Channel Islands or Jersey. You can't go to the Bahamas. The IRS has found accounts in 70 countries. They're opening offices in Beijing, Panama City, Sydney. I mean, where do you go?
There is nowhere left to go where you can have an expectation of secrecy vis-a-vis the IRS. People were speculating that Singapore is going to be the recipient of a lot of the accounts that are leaving Switzerland and Liechtenstein. They'll wind up in Singapore, but even Singapore was made to sign a TIE, a tax information agreement with the IRS. There is really no good first world state, politically stable, economically and socially stable, technologically current, democratic jurisdiction where you can have an expectation that your money is safe. You can be there for asset protection reasons, for foreign investment reasons. You might be an expat in need of a foreign account, but you just can no longer have the mentality that banking secrecy still exists vis-a-vis the IRS.
Right, and more banks are kind of opening up, correct?
Correct.
They know everything.
Well, look, we know that UBS is made to settle a criminal case in return for a $780 million fine. In August, they settled a civil case in return for the identities of somewhere between 4,500 and 10,000 U.S. account holders. That's just UBS. We also know that HSBC is being investigated, Credit Suisse. The people that have come forward in the voluntary disclosure program have given the IRS names of financial institutions and banks and attorneys and service providers that facilitated the tax fraud offshore as well. So the IRS is figuring it all out pretty quickly.
Got to be quick here. So how much money are we talking going to the IRS? Just a quick estimate in your view. Tons, millions and millions.
Millions and millions, if not billions, yes.
All right, got it. Asher, thank you.
Big Brother is definitely watching now.